investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tommy O'Brien. It's my pleasure to be here. This is the Tom O'Brien Show. My usual show is the 10 o'clock Tiger. This is the Tiger Technicians Hour at 10 o'clock to 11 o'clock Eastern Time. And my service here is the Opening Call Daily Newsletter. Let me go through the numbers here. We've got the Dow down. We will have Tim Ward on at the half hour. Dow's down 312 at 42,882. And one of the reasons why I've been saying for quite a few weeks here is that I was anticipating that there would be some kind of topping action, and that's really what I was calling it, just topping action, meaning that we should start to see maybe some double tops. In this case, the Dow 44,855 back in early July, retests it within 50 points at 45,016 on the 23rd of July. At a peak D in the Chapman methodology, started to come down quite sharply. We've been short for a little while now, and we're staying short. And one of the reasons is we also have a long position, and actually a rather aggressive 3 times long from way down, much lower. But the point here is on the short term, this is a trade. And I'm anticipating that there's going to be an arching pattern. And this arching pattern is the type of thing I'll be talking about in my webinar coming up for subscribers on Tuesday, just the kind of patterns in August that we're going to be looking for. And I'm anticipating that this is one of the patterns. We've already seen it work a couple of times. And that is, we call it the dreaded H. Because if you come straight down and then you arch over and fail at a peak A or B, and take out the left side low, you can go quite a bit lower. Look, you just did it. There's an H pattern right there off the high that was made on the 23rd. It pulls back, rallies a little bit, and then fails at it. I didn't put it in. It's too messy. At a peak A, it becomes an A minus because you take it out. So this is one that might occur. You never know. But I'm using some examples, and these are the examples I'll be talking about in my webinar, of the 9-period exponential moving average. You see it was green, this line here. Let me look at the Tiger. Yeah, you can see it, Tiger TV. You can see green, and then it goes pink, and it stayed pink. And even with the rally this morning, it was still pink. And that just says that there's downside pressures. And now what you've got is you've got the 914 negative. You've got the MACD. This is the green and black, green and red lines here. Very wide, negative. The gray line here, relative strength way below the recent highs, negative. The stochastic, 42% instead of over 80%, negative. The on-balance volume down here, negative. So that just says to me that on the shorter term, you've got a sell mode in the Dow, and that'll change if there's a break. I would say probably a close above 44,580 into the 44,600s, and I'll have to say, maybe there's a lot more strength than I anticipated. And a weekly chart has gone to a peak E, and the monthly chart hasn't yet gone beyond the 45,073 all-time high of December of 2024. Okay, with that said, the S&P. So the webinar that I should have got the thing put up here, but I didn't. The webinar is also going to deal with, for instance, the S&P. We went short the exact day of the high, right there. But we used an instrument 3 times short a small position of the 3-time short. Now, what happens is we didn't even get close to our entry point, but because this is a vehicle that shrinks every day, when at the end of the day there's a recalculation, it means that you've got to have a very wide parameter. I didn't have a chance to change that. If it was the original, we got short the SPXS. Look, here it is, at 437. Well, the low today is, even with all of this rally that was going on overnight into the morning, 434. Our stop would have been hit, but I had raised the stop, didn't have a chance to bring it down, because I would have said, let's get it at 437. It's worth trying to stay in this position, because I don't think we're going to make a new recovery high in this particular short-term period. So we got stopped out. It's okay. It's not a big deal. You're at 448 right now. We can always get back in. So the fact is that that this is the technique that I'm going to be discussing. How money management, what you can do when you're short, how you can short, if you can have alternates. If you consider that it's insurance, that's one thing. If you think it's a trend change, and I did it with the Dow thinking that was a trend change. The S&P was at the high, so it was only insurance. So now it could be a trend change, so we could always get in. There's always time, because I think this is the start of just a choppy sideways, lower highs and lower lows kind of move. And that's in the day, the weekly charts. Look at this, the S&P. Let me just go back there. Look at this, the S&P. Look at that. Weekly chart, it is everything strong. The stochastic's up at 94%. That's fabulous. So all I'm saying is I think this is a short-term digestive phase. If you want to go to the QQQ, you'll see it's even better. Look at this. We went to a higher high today than the comparative thing in the S&P. 574.63 was the all-time high on Friday the 31st, Thursday. And then it pulled back very sharply, and now it's come back. And today it went to within 1.5 points. It went to 573.32, and now it's pulling back. And look at this fantastic weekly chart, and the monthly charts are all broken out to all-time highs. IWM, this is different. IWM is already on the weekly chart gone to a peak D, the fourth highest peak. That's where other things can happen. And I believe this is a G. Oops, I forgot to change that. A G in the daily, look at the double top, 226.05, back around about the 7th of July, pulls back sharply, retests it around about the 23rd or so of July, 226.74 within less than a point, double top, comes back down sharply, hits the 200-period moving average, this orange line, rallies up, and now it's starting to fail. I think this, too, is going to be an arch formation. That's what I'm anticipating. It might not, but that's what I'm thinking. And we'll see if that's the case. Then I want to go to the SMHs, which are very important, which, in fact, even to this moment, are still holding up sip of tea for the throat. Sip of tea at 289.88, up 327, all-time highs 297.38. Look, it's like a little head and shoulders right there. Got to be a little careful. But the 9-period moving average has not yet crossed pink. When it does, you can see further deterioration. So this is the SMHs, the semiconductors. Where they go, the market tends to go as well. I want to go to gold. Gold right now, look at the difference. Gold is up 19 at 34.53. But look at the GDX. This is the gold minus. Look at that breakout to the upside. And then I drew in, there's a technique that I'll be discussing in my way. There's going to be so much going on in this hour-and-a-half webinar for subscribers to my opening call on Tuesday at 4 o'clock. It'll be archived at 4 to 5:30 live. We'll even have the futures open for a little bit. We'll do something with the futures. We might. But look at this. Goes right into the resistance area. Will it break out or will it still? Look, doji candle in the GDX at 57.84. I love the action. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks, just to get back here to the GDX. So this, if you look at the monthly chart, I have a target. It just looks like it's impossible to do. To go vertically from where we are at 57 up to the 66.98 high of September of 2011 by September. Well, I've got it in there. It looks to me a little aggressive. I think I needed another month or so before it can get there. But that's what's drawn in this pattern that I call the bar symmetry, with try to find a plumb line in the middle to see how many bars on the left. This goes all the way back to 2011. So I would say 14 years you could miss by a month or two. But anyway, that's what it's just doing real well. We've got a gold position. We are along the gold itself. And so the silver, look at this. Silver is actually even a better chart pattern in many ways. It's up 0.35 at 38.26. The weekly chart has a peak C, and usually in the Chapman methodology, a buy signal upgraded to a buy mode, which this is, should go to at least 4 higher peaks, which should go to a peak D above that. So we'll see if we can get to the 40 level. It's already achieved everything we wanted when we're looking at the monthly chart, going from a high that was made back in 2012. But really, the most significant high would be this one right here. That is October of 2012 at 42.96. So this is a continuous contract. So whatever the high is, look, you see these letters, they get moved around because this gets smoothed out. But that's the high that I'd be looking for sometime in the next 6 weeks. Let's just go to high-grade copper. High-grade copper is trading down. It's done nothing since that terrible calamity. We're going from 580 down to the 440 level. The dollar, here we go, dollar DXY. We got out of our long dollar that we were in from 2018 quite some time ago, saying, you know what, if the Trump administration, its first administration, wanted a lower dollar, they're getting it now because they want that whole thing with the currencies between countries, etc., and commodities and products. So this is, I just don't see much for the Dow to move up, and that's the way it is. I do want to go to... So this is going to be important because what we're looking at is crude oil has just done nothing. And then there are talks coming up this next week with maybe with Putin. So crude oil is just really not until it's 63, until it either breaks below 62 or climbs above 68, is just kind of stuck. That's that. And then bonds, it's really important for bonds not to get in the way. The yields can stay in this area. They don't have to go down very much more, but they just mustn't break to the upside much more than it is if you look at the TBT. So just to sum up, because this is normally the time that Tommy would be, this is in his show for Thursday, just before we go to Timor. Let me just sum up. So we're looking at the bonds having double bottomed. This is the yield. So just got to be careful at 3.5 that it doesn't really go very much above 3.6 over the next week or two. That could create a problem. So I just wanted to show you this chart right here. So this is part of what I'll be discussing in my webinar coming up for subscribers. And check out the front page of TFNN. You'll see everything advertised there. So you see this chart right here. Let me just change it to the Dow chart. I only use this with the Dow. The Dow daily chart, Chapman Wave Dark News Index, the DNI. What I talked about was you get earthquakes, and then you get the aftershock, and that aftershock can be less, the same, or more than the earthquake. And I treat it as an internal high, and then a retest, and it makes a residual high, or an internal low, and you get a residual low, and that's where things take off. Well, this is very unusual. I put this little white thing here saying this is where you've got some uncertainty. You don't know exactly what it is, but there are a lot of things out there that are just quite a little bit shaky, and therefore I think we've got an internal high and a residual high, which is another reason why we've been short, and you can see this pink line, you can see the pink line. So what this dark news is that there are always something. The expression is that the market hates uncertainty. And my expression is, oh, nonsense. Every day the market deals with uncertainty. What the market hates is uncertainty about uncertainty. And that's kind of where we are. And that's the reason why I'm thinking that we don't know exactly whether it's tariffs, whether it's the Fed chairman. It doesn't matter what it is. We're not sure what. But there's a chance that if we start to arch over, and I'm going to go to the VIX in a moment, that the Dow, I'm using the Dow just for the moment, we can use any of the indices, but there'll be a return down, and then all of a sudden in about, say, over the weekend into Monday, going to Tuesday, suddenly there'll be something that is reflecting some kind of dark cloud over the economy. Doesn't matter what it is. But then it has to be perpetuated. It has to be, instead of being reviled, it's got to be encouraged by the media. Oh, they grab this and they use it as a headline, and then it just permeates everything. We haven't quite got there yet. And that's what I'm anticipating. We'll start to see the market move down quite a bit more. Okay? So that's the Dark News Index. The other thing I wanted to talk about at this particular point is within the different sectors. So I usually don't like to talk about this because this is just something that we got this morning. But I was really looking. I've had a number of stocks on my list that I'm looking at. I'm saying, in this environment, what do you think would work? I don't know what will work, but it seemed to me that IREN, limited ordinary shares, this is data centers and GPUs, it was just in the sweet spot, purely on this cup formation, this technical basis. You remember we were looking at these charts, and I said we're looking at three patterns, straight up, straight down, cup formation, arch formation. I spoke about this one, this dreaded H. But then you get the cup formation. And if, in fact, in this environment, and look, it's down just 2 cents today at 18.30. It was all the way up to 18.96, and I say we're not buying it on the gap up. We want it to be pulling back. We got it on the pullback, and now we're actually up a little bit when the market is down. So in this environment, that's the reason why I wanted to do this webinar, to say in this environment, there are places to put your money, because I don't know if this is going to work, and I usually wouldn't talk about this because subscribers only just got into it today. But I wanted to show you the techniques that you can use in looking at the market and saying, you don't have to jump off a cliff, everything. There are places that are working. So with that said, just this symbol is IREN. I have no idea if this is going to work, but I drew all the cup formation. I did the left side, right side, price time match. I did the Chapman Wave inside wedge, target, resistance line. Everything is working, and yet until the MACD crosses positive, this is a hesitancy, but it did cross positive with the 9 period over the 14. Here's another thing, Bitcoin. So a question came in this morning about Bitcoin and ETH. This is Ethereum. And I said, I think there's a chance that we can start to see a little bit of a switch, not just that Bitcoin fails, but Bitcoin rallies, but you start to see other areas in the whole Bitcoin area start to move up, as if to say there's a certain independence. And I think that ETH is something to keep your eye on. We don't have anything there. We do have the Bitcoin, the IBIT, way down. This is doing very nicely. We've been long from, which I can't remember the exact date, but yeah, we've been long for quite some time. And I don't really want to change that because within the context, I mean, so we're long from October of 2024 at 38.77, Australian right now, 66.32. We haven't really added to it, but I'm watching it closely here because if the Bitcoin BTC, if Bitcoin is able to stabilize and then start to move up even more, that's a good sign. But you've got, stocks like GE are still holding very well. Robinhood, both of which we've had for a long, long time. Those are the ones, those are key. If they really start to tank here, then you're going to see the market pull back sharply. So we're going to have tomorrow after this. The Dow is down 318. Basil Chapman sitting in for Tommy O'Brien. I have the opening call daily newsletter, and I will be back in a moment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And I just wanted to quickly say that within the context of the overall market, this is very interesting because if you look at Robinhood, it's been holding up beautifully today. It just made it like a double top, 113.14 back in mid-July, pulled back very sharply to 93, and then it comes all the way back today to 112.63. So not everything is working at the same time. And, tops are made rotationally and bottoms are made in unison. So there's a climactic moment. I'm going to go to Tim Ord. Tim, are you there?
I am. Can you hear me?
Great. How are you?
Good. Glad to be on again and take a look at the market, see what they're going to do here. Is my charts up?
Let's see. The charts are, let me just check. I think they should be up. I'm looking. I see in the Tiger YouTube, I see myself, but I see Tom Ord mentioned. Just give me 1 second. I'm going to just check in here. He'll tell me exactly what's going on because it's obviously better for us to have the charts. There we go. It's up. Okay, let me just check on so it's not up on the YouTube, but it might be up right here. I'm going to go to the charts from this angle. Pity, I wanted to get to it right away. Okay, I see myself. Oh, I got a chart here that's got an incorrect. No, I do not see the charts. So let me just ask Al if there's an issue. So why don't you start speaking, and as I see the charts come up, and people will see it if they're looking at Tiger TV, why don't you start telling us what's going on? And I don't want to waste time. We'll get the charts in a moment.
All right. What I'm looking at is the weekly chart for the SPY right now. And I'll start off with the weekly, and we'll go back to the daily. But I want to show where the weeklies are. And ideally, last week it drew a bearish engulfing pattern, and I'm outlining it in blue right now. And a bearish engulfing pattern, it actually engulfs the week before, and normally those come at tops. And this one is actually a high volume compared to the previous volume. So volume really jumped up last week and started off above the previous week's high.
Can I just interrupt for a second? So for folks
Sure.
Who are looking at the in the den, check on the way back chart. You'll see it. So everything's set. Sorry, I just wanted to interrupt to tell charts are there so everybody can see them. Okay, so continue, please.
All right, so this is a weekly chart, and I want to point out last week did draw a bearish engulfing pattern on the weekly charts. That's where the market starts above the previous week's high and closes below the previous week's low. So it totally engulfs the whole trading range of the previous week. And those things come at, bearish engulfing patterns come at highs. And also, we had we had a jump in volume higher than over the last several weeks. And a lot of times, a high volume bearish engulfing pattern, the high of that bearish engulfing pattern is tested. Not always, but most of the time it is. So there's a good chance that last week's high could be touched. And if it's touched on a lighter volume, that could end up with a sell signal. So we'll see how that happens. We haven't quite reached there yet. Market's kind of
So Tim, you consider the engulfing to be your first, like a yellow light, your first warning, right?
Yeah, it's the first warning. Is I think we're made at some sort of a top, not of any major consequence, because as I pointed out last week, we did have a sign of strength back on this day right here, a sign of strength through the previous highs of February, and that was a breakout to the upside, and that happened around 61 or 610 area on the SPY. So we had on the bigger time frame, we broke above the February highs with a sign of strength. Now the February highs will become support, and support around that range is 6,100. So we're probably not going to. We'll test that area probably a couple of different times. So bigger trend is up. Last week's bearish engulfing pattern flips the market at least sideways. So I think we're going to develop a trading range in the coming weeks where last week's high is resistance and the February high is support, and that works out about 6,400 to 6,100. So I think that's where the trading range is developed, and that's the reason why I draw these blue lines here. So it's going to be a tedious market. You're going to go up, I'll get a sell signal, but not a big down, probably 6,100. But anyhow, that spread from 640 down to 610 is about a
6,100 is a pretty big pullback. I mean, it's nothing to sneeze at. You take out 5 or 6 weeks worth of upside action, right?
Yeah, it's worth trading. So if I get a good setup, I'll try to trade it. But right now, I really don't have a decent setup. So, but I'm thinking last week's high is tested. If I get some bearish confirmation up there, if we do test last week's high, I may go short for a downside target around 6,100. I do think 6,100 will find support. Then we may bounce up again. But in general, I think the whole market's going to move sideways probably into October. So that's what I'm seeing. This chart is the SPX tilt ratio. The SPX tilt ratio usually leads the SPY or SPX. And if you notice last week, this is last week's trading range right there, the tilt ratio didn't even get close to the previous highs, where the SPX right here did break a new high. So that was definitely a warning sign that if the SPX didn't hit a new high and the SPY did, that's bearish divergence that you're setting up for some sort of a high. So that kind of suggests we're making a high here too, but I don't have a clear signal. Right now, the only thing I could say was we're probably, again, 6,400 6,400 on the SPX is resistance, and 6,100 is going to be support. So I don't have a sell signal yet. I'll have to wait and see how last week's high is tested, and I could end up with a sell signal for a downside target of 6,100. And once we do get 6,100, I'll have to see if we get panic in that range. If we do, I'll probably end up with a buy signal around 6,100 with a target of 6,400. So it's kind of complicated, but that's what trading range do. It's not going to be a continuation market. It's going to be chopped. So you're going to have to be careful where you keep your stops, I guess you might say. So that's the equity market. Not a whole lot, but I think October time frame is going to set the tone for another big advance that may be as big from the April low up to the July high. So that's what's coming, but that may not show up until October. But I think it's 6,100. I guess if basically I'm bullish on the intermediate term. If you want to trade this sideways pattern, fine. But in general, there's no top of any consequence here other than a trading range from 6,400 down to 6,100. The bigger trend's up. So you can hold long if you want to.
Okay, so we've got a break coming up. Of course, we want to hear what Tim has to say about the metals, and we'll be right back. Let's see, the Dow right now is down 294.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. The Dow is down 276, the S&P is down 15. We're on with Tim Ward. And Tim, the next chart you want to go to? Are you ready to go to the next chart?
I am. And
okay, great.
This is the daily GDX GLD ratio. So it basically
can I just explain to folks that GDX is the gold miners. Yes, continue.
Right. GDX gold miners and GLD is the ETF for gold.
1/10 the price of gold, right.
Right. So I look at the ratio. So this middle chart right here is the GDX GLD ratio. It's just a daily chart. And what I did was put an RSI to it, and that's the top window here. And the RSI of this GDX GLD ratio, so it's the equity gold stocks compared to the precious metals, is what that's measuring. So, there's a relationship there. And I do a lot of stuff with momentum, so I put an RSI to it. And I mark the times with red lines, all through here. The times when the RSI got above 68. We're actually 71.2 right now. And all those came close to highs. And this chart goes back to 2021. And they all came close to highs or right smack at the highs. And we got an RSI again at 71.2. So we're at some sort of a high. I've been saying that for the last several days. But anyhow, there's another reason why we're looking for a consolidation of gold, because the RSI of the GX daily ratio is above 70. So previous times you get consolidations, you can see them there on the red line. So there's another reason why consolidation. This is the XAU going back to 1988. Show this chart on Tuesday, and the RSI is up around 74. We're up around 75 right now. Still expect to pull back. It's pretty rare to get these signals. Last time we got a signal came at the COVID high, March 2020. Market consolidated for a number of months. I don't know we'll have that, but I think we'll pull back to around 80, 185 area, 180, given that vicinity. But here's another one, short-term chart. This is similar. If you notice, I got my subscribers out of the gold market, at least on GDX, back in mid-April. And the reason why is because of this chart. This move right here going into the mid-April high was actually parabolic. And we got the same thing going on right now. Market's just really consistent to the upside. And we have the same divergence. The bottom, or this window right here, is a GDX up-down volume with the 18-day average. And the next window higher is a GDX advanced decline with an 18-day average. So it measures the advanced decline and measure the up-down volume for stocks in GDX. And so there's very few stocks carrying this rally, and there's very much, and the stocks that are carrying the rally have very limited upside volume compared to the previous high back in, it was like about mid-July. We had a minor consolidation. Here we kind of exploded up because just a few stocks in GDX exploded up, but the majority of the stocks in GDX didn't really perform. So to me, this is a parabolic move to the upside. Parabolic moves to the upside normally end badly. This one back in mid-April didn't do too bad. I mean, it retraced back down to 45 from about 54. I don't know how much this replaced. I think we'll still have a chance to get down to 40. If we don't, we don't. But you shouldn't chase parabolic moves to the upside. So we're basically on a sell signal here. We're actually short a couple of days ago around 55 on GDX. We're at 57 area right now, and 57, 58. But we did get short. I think a minimum downside would be 45. I still think 40 is a possibility. But we'll see how it plays out. But this is not the time to chase gold stocks right now. So I think both the equity market and the gold stock market will actually pull back together is what it's starting to look like. So not a big bear, just a pullback in an uptrend. So I think we'll pull back, maybe again to the April low, possibly to the March low, but that's it. Then the uptrend, in our opinion, will continue to new highs again. So this is kind of a timeout and an uptrend. So been kind of saying that. So far I got egg on my face, but I got quite a bit of evidence that this pullback's still going to happen. So these parabolic moves to the upside are kind of hard to find where the exact high may come. But we're still, the fast moves, you have to sell in strength and you have to buy in weakness. And obviously this strength that we basically started off around high volume, it looks like about 51. We're up around 57, 58 right now. And that type of percentage move can't last. It's not going to keep going. It's going to find a top and reverse down. So, but the bigger trend's up. All that means is the bigger stocks, with the stocks in GDX are the bigger stocks, are the ones that probably could consolidate. The small ones are just starting to come to life, and I pointed out on our past interviews what some of those are, and I think those will still perform very well going forward because we haven't reached the speculative market yet in the gold market. That comes at the very end, so that's still in front of us, but the bigger stocks may consolidate. So I don't know, I'm welcome questions. Got any questions coming in?
I can't actually see some questions. Makes sense. Gold pulls back with the market. Yes. So only a question was more a statement than anything else. And that basically says that if the market starts to pull back, very often gold stocks, the metal stocks start to pull back. What I've noticed is sometimes that if the market pulls back quite sharply, then sometimes what happens is in order to facilitate and get money, what's done very well, if it's the gold stocks, they start to take profits in the golds. So we'll see. But in the meantime, I'm just thinking there's no geopolitical thing going on right now that should have made a gold and silver spike like this. So there must be something else. And basically, if you're a technician, what you're looking at is that the technicals have been pretty darn good and it's made a very long base. You've pointed that out for quite some time. So,
here's stuff I want.
Yes, please continue.
But here's one support. Basically, if you look at the gold here at the bottom of this chart, gold pretty much has gone sideways here. The big spike in this ratio, if you can see it right here, is because gold stocks have spiked, not gold. So that's the reason why that RSI went up to around 80. So it's too much of a quick move. You want to see actually a gradual move up. But if you see these quick moves where the GDX to GLD ratio jumps up sharply in a short period of time, pushes the RSI above 70, that suggests that gold stocks will will correct, because that's gone up too fast. It also works just as well as on bottoms. If gold stocks go down too fast compared to the price of gold, you find a lot of times bottoms in that, which I didn't label. But anyhow, gold stocks gone up too fast compared to gold, and that's usually a bad sign.
So, Tim, I appreciate, as always, speaking with you. Folks, go to Oracle, check out his work. He always puts in every year what he's done. He's done fantastically. So, looking forward to your interview on Tuesday. Have a great weekend.
All right. Thank you.
Thank you very much. Folks, we'll be back. Basil Chapman sitting in for Tommy O'Brien. Dow's down 280.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I just wanted to show you this before I forget. I often forget when I'm doing this. I am doing a, did I click on that TFNN? TFNN. Okay, we don't have that. All right, so I just wanted to mention that I'm doing, this is Basil Chapman, and I'm doing I do the Tiger Technicians Hour, 10 o'clock to 11 every day, and I don't know why this is blanking out on me, but, and Okay, and my newsletter is the opening call. And if I can just get this up, there it is. Okay, I just wanted to show you that I am doing a live webinar for subscribers. So you'll have to become a subscriber. What you get is all my webinars, all my newsletters, and most importantly, there it is, home. All right, we've got it. So this is what I'm coming up with right here on the left. This is the opening call. Opening call, Basil Live, subscriber webinar announce, identify trend changes and what action to take. Tuesday, August the 12th at 4 o'clock, 4 to 5:30. It's archived. They'll talk about the Chapman Wave technical tools that help identify trends and trend changes. Let me just show you this one quick thing before I go anywhere else. Look at this. This is one technical tool that I used. Isn't it amazing? Look at it. This is the SMHs. You see this green line? You could have held this positively all the way through. Look at this. This is the Dow. Finally, the Dow turned down on this green line. If I can just get it right, there it is. And what happened? All of a sudden, you've got a sell mode in the Dow. Oh, well, there it is. See, it went pink and was green all the way through. So we've been long, 3 times long, small position in the long position, but we've just added a 2 times short. And this is a technique. Look at this, Robinhood, we're still long, and it hasn't yet turned down to pink. And I just had this in the background. Tim was talking about the small cap stocks. So look at this. We've got core mining from the just under 8, and today it hit 1131 leg D. So this is the stuff we'll be talking about. What can you do? What can you do in this environment? Basil Chapman signing off, and check out my opening call. Have a great week. Have a great evening. See you tomorrow.